Welcome back to one of our, we'll call it a micro podcast, if we will, or a fireside chat where we have our teaching tax flow. Mike Reed's back here with us again. And heck, Mike, I appreciate the background that we're looking at here. It looks like you actually brought a fire to our fireside chat. So that's interesting. I'll take it. Even though it's, 90 degrees outside right now in Michigan, I'll, kind of do this to warm up my proverbial hands, I guess. How's it going, Vin?
It's going. And regardless of it being really hot, I love a good bonfire, so I just can't get away from the fire no matter what season it is. Whether you get to warm your hands or cook s'mores over it, man. It's always a good time to have a little fire. Fireside chats, fireside hangouts.
Because I feel like people have more bonfires when it's warm out than when it's cold out, but, it is what it is. It's kind of like taxes and accounting, right? Sometimes you do things backwards. I was going to say another term, but I don't feel like editing out my foul language. So obviously on this topic, we've touched on this briefly, I think, in other discussions we've had, very briefly, maybe like twice it's come up. I don't think we really dove into it at all. But when we look at this, right, we're looking at, month end or month's end and exactly what that is, right? Like, sure, we know what a month is, we know what an end is, but in the accounting world for businesses, what does this actually look like? Why is it important? Basically give us the lowdown of this bad boy here.
Absolutely. Month end is an exciting time. It's the time where we look at the very most recent prior period. An accountant, typically a controller or a bookkeeper of sort, is usually positioned to do this, is going to close up all the loose ends, all those accounting transactions, make sure they're complete, and book them into an accounting system. They're going to have checklists. They're going to have a different, subset of follow-up direction with the management team, go through all this rigmarole of double checking. That's always a little bit more than just the day-to-day, check the box, get this transaction done. There's a lot of that goes on during a month or a year for that matter. But month end is a period of time where we focus a little bit sharper and make sure that all those little loose ends, all those little extra pieces that inevitably don't always happen day to day are cleaned up, and there's a clear cut for the most recent prior period of time that the transactions are accurate and we can pull reports and identify information from that.
Great way of explaining it. And I think too, I'm sure you have many a times, but if somebody really doesn't allocate time, resources, bandwidth, whatever we call it, towards closing out a month, I imagine it's quite a disaster when they try to be like, oh, I'll just take care of it at the end of the year, right? So you don't catch things like crazy things that could slip through the cracks, right?
Crazy things that slip through the cracks, and then you realize how good your memory is not very good. What happened in February of whatever on that day that this random transaction happened? It's inefficient. There's an efficiency to it. You can do it. At the end of the day, a lot of the time people are doing a year end, obviously at a certain point in time because of compliance reasons. A tax return is one of those reasons. It could be for US GAAP financial reports that you got to send to a bank. The biggest driver, I think, as to why you want to keep on top of it, other than just getting the accounting task done, is management decision making. You want that to be accurate in order to drive the organization forward in real time. So looking back too far means that there were likely transactions that didn't get understood and could have been understood in a more in-the-seat, real time. And of course, when you're trying to complete a year-end, potentially for a compliance-oriented matter, it's inefficient to go back and remember all this stuff, and it's a little painful, honestly.
I have a hard enough time trying to remember, what exactly a transaction was on a trip 2 weeks ago, let alone, months or quarters down the road. Cause it's simple, but, basic, example is like, even if you're buying supplies or whatever on Amazon, right? Every time Amazon shows on a credit card statement, it looks completely different. So it's not like it's going to say, oh, Amazon, paper towel or anything like that. It's just throwing stuff out there, and it's pretty hard to track that, right? So I imagine if you're buying materials or something like that, basically just loading up your COGS, or really your cost of goods sold, even trying to remember, where to categorize some of that is challenging, to say the least, right? So,
It is challenging. It's very challenging, and nobody's alone when they say, I try to catch up the books a year later. There's certainly a lot of individuals that do that. I would always encourage the month end, though, not only just for the sake of that memory thing that's very difficult to do, but I think the real driver to want to do that, to say, hey, I am going to do a month end, is when you can find reliance on making better decisions with the information. And compliance is necessary. It's a necessary beast that we all have to face somewhere, somehow. It doesn't always lead to in-time, real game time decisions when we're maneuvering out in the field. I would provide the motivation to do it. Now, inefficiency, true, but to say, hey, I can make a better decision today if I know X, Y, Z, or at least get enough of the accounting done in a period or cycle of time that it leads to the better management decision making. It doesn't mean that some types of accounting and some entries can't be done at year end for compliance to make the whole thing complete, but month end should be the majority of it, and it should definitely be the ones as to is it going to help lead management decision making, better decisions for the organization. That is.
makes total sense. As everybody knows, I'm
Yeah.
the king of bad analogies. It's like driving down the freeway, right? If you're only looking straight and you never take a moment to like look to the sides, you have no idea where you're at. So you could be, I mean, you know which direction you're going in, hopefully, but you don't know exactly your current state
Mm-hmm.
until you lift your head up, basically. So,
Well, I have my own illustrations of my own too, Johnny. So I appreciate that, and I agree with you on that. Looking around, understanding what's going on is part of it. But I'll take a little bit of a deeper dive on trying to say why you should do it, how you do it, what it means, other than just some of the basic commentary we've talked about so far. So I've got 2 items to throw up on the screen right now. I'm going to go ahead and grab them here. All right. I got a book and I got a tape measure.
okay.
Okay. So let's talk about how these tie in. All right.
What's
So
even
what is
funnier
this?
than that is that book is over here on my shelf, and
Oh,
that
yeah?
same exact Stanley, is that the Stanley Fat Max tape measure? I think I got the
Yeah.
same darn tape measure in my truck.
Wow.
Look at that, man. Great minds think alike.
The
knew
great
it.
minds think alike. That was not planned.
I swear. I'm not kidding either, like literally. But let's see how this book goes the extra mile.
Sure. A month end period, or for that matter, a quarter end, for that matter, a year end, pick your whatever end. I'm going to focus on month end because I think it's extremely important, is a measurement. That's why I have the tape measure here. At any point in time, I need to measure where I am at or what I'm doing. I need a tape measure. Think about, year end could be the barn. All right. I got to build a barn. I can't build a barn, though, unless I know how all the little pieces of wood and every little inch, every little foot, the whole thing, I got to cut and splice and dice a bunch of stuff. And the more I understand all the intricacies of those measurements that go into that barn, I'm going to be able to build it. So if I want to have a year end or a year that goes a certain way, there's a lot more that goes into that. And the deeper you go and the more you can splice and dice the information and doing it through periods of time, which in this case is month end I'm talking about, is a very, very great way to measure the business and its success and how it's doing in real time. I've even seen people do weekly scorecards focusing on very, very key specific pieces of information when depending upon their circumstances and how that business works. So we definitely want to take that time to measure out all the pieces, and time is one way to slice and dice the information in a data set with financials.
I like it. Good analogy, sir. Good prop, I should say.
Mm-hmm.
Very well.
All right. The book. The book is, books can be a lot of things, but more or less providing us information, a story, a commentary about something, which is exactly what we find when we splice and dice and measure and cut up all of our financials into periods of time. It's a story. How I did in January for whatever reasons is going to be different perhaps that I do 6 months later based upon real-time decisions that I made at that point in time. And if I have good, clear-cut, measured data, with the tape measure, I can compare different months against each other, different periods of time, quarter against quarter, year over year, whatever concoction of data set I want to put together that conveys a story of success and defeats. You can go all the way into all your chart of accounts, obviously, at that point in time to find different pieces of information. So having a complete data set other than just periods of time is important, but it's very, very critical to be able to have that properly done so comparability over time to convey the story is even an option. And even think about the book. It has chapters. Sometimes they have volumes. Even in the book, there's a reason why we splice and dice the data, the information in certain ways to convey a chronological story of how things are going. The financial statements can be a lot of things. I've called them a scorecard before. They're definitely a story as well. The story, the journey of the organization, how it goes from point A to B, year over year, month by month, quarter by quarter, et cetera, et cetera.
I like it. I like it. And it's a good book.
Yeah.
Yeah.
Good.
It's not bad. Awesome. Well, where do we go from here with this, right? So month end, I'm sure some people say, all right, I already knew that. Like, it is what it is. Great. Now what? Like, is there more to this, or kind of in your words and wisdom, right? What does this all look like?
It may even sound kind of simple on the surface. All right, splice and dice my information. I compare to look at it. Okay. There's a couple of traps that I want to throw out there that make something that seems perhaps straightforward, not so straightforward. And the first trap that I'm going to call out is called the never, never month end. I think of this as never, never land, this fictitious place that doesn't exist. You have circumstances, and I've seen this too many times, when month end never ends. There has to be a period of time at which the accounting team, the management team, whoever it is, sits down, reviews what happened, and that's it. You close the books. You never go back to them. Because that's what that story was in that chapter. After I read chapter 1 of this book, I don't go back and write chapter 2 into chapter 1, do I? No. It's chapter 1. Chapter 1 told me something. I move on.
And you can build on it,
write the whole
obviously.
thing, but
like moving
yeah.
forward, you're building out of the chapters, obviously playing on the other chapter. There's not a total disconnect, obviously. It's a flow.
Right.
Okay.
Exactly. There is I see this at points in time. People don't want to close it out, or sometimes what will happen is the accounting isn't so solid. The month-end process hasn't gotten so good, or we're missing things. And we'll do a current month review and we'll say, oh my gosh, we spent too much on supplies. Oh, wait, you know what? That was an accounting entry that actually should have been booked 3 months ago. So I'm going to book back that entry into a different month. Okay, now the month makes sense. This is what really happened. Okay, solid. It helps you understand what really happened. But what did I just do to the prior month? I made it worse. I'm booking things back. I never have a month end. It's the never, never month end. It's this fictitious place that we never can ever have good accounting, good solid structure, good checklist. The how. How do I do it? My how is not doing so well right now. And I keep having these entries that are flying all over the point. And in which case, what is a month end anymore? It's not a month end. You don't have one anymore.
Makes sense. Yeah. So once you close it, there's no going back. You lock a door or throw away the key.
Yes. Quite often, this can also affect compliance-related oriented matters. I can't tell you how many times we get a financial statement from somebody and they say, my books are done, here you go. And it gets reported off to the IRS, or perhaps if you had US GAAP financial, it gets reported off to wherever it needs to go. A year later, you get the financial statements for the next tax return. And guess what? The prior year data that was reported was changed. And that was a year end. That'd be the never, never year end and guess what happened? The wrong information was given to that compliance organization. And guess what? Now, if you do extra work, extra time, extra stuff to now book it into the current period, it distorts the current period. It's true, but reporting is reporting. You have to make sure that everything is provided, and that book back risk not only creates compliance issues that could get you into trouble, but it distorts the management review. If I am somebody in the management room and I think, oh my gosh, I did so good in January, and then in March I found out there was an error, that meeting in January was kind of BS. You didn't do good. You didn't have the right entry, and you're making decisions between January and March that might not be so good, and hopefully they work out. You can never, ever have a true analysis and a true understanding of what's going on with the never, never month end or never, never year end, whatever you want to call it.
Makes sense again. You know a couple things about this, don't you? So you've been doing it a few
I
years.
may have seen it happen a few times.
Just a little bit.
Just a little bit.
So, well, where do we go from here, man? As we kind of wrap this up, right? Where's the best place to really leave people with maybe on this?
It's important at the end of the day that when we're thinking about month end or periods of time, that we are measuring the business appropriately and we're understanding the story. If we understand the story with clear measurement, we can make great organizational decisions. Otherwise, loose month ends manifest into loose decision making, and that's the worst part, because whatever gets reported on a tax return or financial statement for somebody else is what it is. But that true organizational success is what we want to hover around, and having that ability to understand in real time is critical. And that's the biggest takeaway I could take from anything, and the importance of dialing it in and putting that attention to a month-end procedure. And quality. We can always pick up a financial statement and look at it and say, it is what it is. But unless you actually challenge the process in that room of what happened in that month and do something about it, that's when it's powerful.
All right, then. All right. Well, the good thing about this, for anybody that's watching or listening to this, right? We're talking about the end of the month, and now you're in the middle of the month. Actually, we were before that a little bit. So you got a little bit of time. If you've never done this before, you got a little time to put your head in the game, right? You just kind of, like I said, relax a little bit. You got a little time. Don't wait until the end to figure out what you're going to do at the end of the month, but get your beep together a little bit.
Right.
So awesome, Mike. Well, I appreciate you jumping into this one, man. And hopefully you keep the fireplace up there. It's a nice little touch, nice ambiance going back there.
I'm going to keep it up for my team meetings now. It's here. It's here to stay.
There you go, man. And I'm sure any of your clients will have to mess with them. And just tell them you're in some other part of the world where it's wintertime, even though it's summer now. So again, everybody, thank you for joining us on this. Me and Mike will keep having these every once in a while, posting them on there, but also just subscribe to the channel so you get the notifications when these come through, as well as all of the other podcasts and discussions and quick tips and reels. We did just pass over 1,000 subscribers here on YouTube. It's a little milestone for us, as well as I think we're up to like 520 videos total. So not just these, but reels and stuff from it. So substantial amount of information on that. Check it out. You can actually search within the channel itself. So if you go to the channel and go up to the top of the page, it looks like you're just searching YouTube as a whole, but you're just searching within the channel. So put in some keywords in there, find it, and we will see everybody back here again on our little fireside chats. We need like a crackling fireplace sound. So maybe we'll add that in, but awesome, Mike. We'll talk to you soon, buddy. Appreciate it as always.